Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today I am delighted to be joined by James Maudslay from Equinix. James, how are you?
I'm good, Toby. Thanks for having me along for this discussion. Yeah,
No problem at all. Listen, great to be speaking to you, and a very interesting time. I'm sure it's been for the company. There are probably few that are lined more into the fire of opportunity and problem solving than Equinix at a time like this. But for those who have been living under a rock and not heard too much about the business and yourself at the moment, can you start by giving us a little bit of background to yourself and also the business and what you guys do?
Absolutely, I'd be delighted to. So, as far as myself, my name is James Maudslay, as we said. I am a subject matter expert in financial services and insurance, based in EMEA. Financial services I do for Equinix, my employer, purely in EMEA. Insurance I do globally, because I'm the only person currently acting in that role as we speak. As far as Equinix is concerned, many people will have heard of us, particularly in the capital markets arena, because we're pretty well known in that space. We have a very significant financial services ecosystem, and Equinix now is what we would like to refer to as a digital infrastructure company. We were originally an organization purely based in the States, whereby we connected the fiber optic lines together. So we were a sort of network peering point, if you like, and that stretched itself through into co-location. We grew around the world with that, but relatively early on, we established an ecosystem for e-trading, capital markets, with exchanges, with buy side, sell side, market data providers, and so on, where companies could come together and trade efficiently and securely in close proximity with very low latency to each other. But these days, with the advent of cloud, as I say, we now see ourselves more as a digital infrastructure company there to join multiple sections of the digital commerce market, be it in financial services, be it in manufacturing, wherever it is, together so they can exchange data.
Okay, fantastic. And there's certain parts there which you talk about which are highly prevalent at the moment, and I guess there's been areas there which have been absolutely booming over the last few months. Tell us where you've seen the sort of the heat map of activity for Equinix over the last couple of months.
Sure. Well, I think that firstly, because as I say, we've set ourselves up to be a digital infrastructure company, it was somewhat inevitable that when we had this shock to the market, this change by which businesses of all types that had been operating on the basis of people being together in offices suddenly found themselves where their staff were being sent home to work from home. And this gave lots of people various issues. And certainly we've been able to play our role in assisting them in continuing their business, in continuing to trade. And the place we've really seen most of those developments has probably been firstly in terms of communications, in terms of people having to grow the volume of their comms, because that was being driven by their need to collaborate digitally. So, for example, we all know the famous names like Zoom, like Teams, like WebEx, and so on. And all these techniques, these systems, have been used to a far greater extent than ever before by really every company that has been able to continue trading. And so we've seen a substantial sort of uptick in effort in that area. So that's really the first thing, sort of collaboration area. The second thing is that more specifically with the capital markets, we've seen a substantial growth in the volume of trades. And so we've been trying to help our capital markets customers wherever we can to address that growth and make sure that they retain the capacity to trade at maximum efficiency in response to this sort of growth in business they've seen over the last 6 months.
Yeah, and it's been a phenomenal change in growth in business, as we say. And I think that there's probably been in many cases over the conversations I've had over the last 6 months, a sort of touch of embarrassment about that growth that's been happening. But by contrast, I think it's, and I've said this on a few of the episodes thus far, that actually the robust sort of performance of the financial markets during this stage has been, such a vital pillar in the continued stability of the global economy, and I think it's
Yes.
that sort of digitalization has driven that ability, and thank God for many of the companies such as yourself who have allowed that sort of seamless progression within it. And we've seen a big growth area in financial services, and something that's probably been dragging its feet for many years now, something that maybe should have accelerated 5-10 years ago, which is this sort of journey to the cloud. And we've seen a massive increase in financial companies who are working around that as well. To you, what does it mean for financial services companies, and how would you address that?
So I think I split the effects of cloud, the need for cloud, into a few sections when it comes to the FS market. If we think historically over the last few years, I think there has been a certain element of, I suppose, suspicion, probably be the right word for it, where these highly regulated organizations looking at the cloud, they're wondering, if it is okay for it to use it from a regulatory perspective. And obviously, as we know, in many places, regulation by sort of principle has been the norm, as opposed to rules being laid down extremely prescriptively. So they've been looking at that and wondering what they can do. Now, what we have seen a lot of is the shift of what I might call office productivity tools out to the cloud. Things, for example, like Microsoft 365. Which is not something that necessarily has an immediate impact on clients, and therefore, of course, potentially has perhaps a sort of a lower focus in terms of regulation. So we've seen quite a lot of that being shifted out to the cloud. We've seen quite a lot of analytic work being done in the cloud. We're all very familiar how, particularly in capital markets, shift to extremely powerful systems that require very, very high levels of compute and very significant amounts of storage that are hard to meet on on-premise basis. So that's been shifting out there as well. And of course, we've also seen the growth in DevOps on the tech side being done in the cloud as well, for all the same reasons. I think where we've yet to see a huge push from capital markets firms is in the activity trading itself, and that, of course, is probably due to issues surrounding latency and the sort of the guarantees that they can get to the exchanges and make the trades in the sort of speeds, the times that they really need to achieve that in. But on the other hand, we have seen things like historical tech data being stored out in the cloud. So I think there's been an interesting balance of things being moved out there. I think what now is going to be even more interesting to see is whether that begins to lead to a sort of substantial uptake of cloud usage when it comes to actual trading environments themselves.
And so what's your crystal ball say on that? Because it's very interesting, right? Because it's been a sort of inevitable and inexorable sort of rise of cloud into most markets. And if we look again, this is a theme that I've been talking about for many months now on this show, where we've talked about how retail, probably and e-commerce in particular, sort of lead the pack in terms of how how latency and velocity is improved through cloud technology. Finance has always been very, very reticent for security reasons, for the pure nature of the beast, so to speak, on it. To me, it seems like it's an inevitability that it will catch up at some sort of stage, but it has to have that confidence leap. Do you think it is inevitable that it will move on that trading side, or otherwise?
when it comes to cloud, I think for many things, and especially when we think about areas that have unpredictable workloads, if you have very, very predictable workloads and you know how they're going to develop over time, then certain areas of the cloud, perhaps the imperative becomes slightly less clear. But if the workload is unpredictable, then the cloud really begins to come into its own in terms of what it can deliver for people. So I think the first part of that's going to depend on workloads that are unpredictable shifting out the cloud. That I think we're definitely going to see. Now, the next part is again, we've talked about latency a couple of times now. Latency is something that that obviously the cloud service providers, the big the hyperscalers, if you like, are very much aware of, and they've been seeking to take various steps that that can solve that problem. And for example, we at Equinix have been doing quite a lot of work in Europe in developing sort of smaller tenanted data centers, or xScales as we call them, where the hyperscalers are actually bringing substantial amounts of cloud very, very close, i.e. close proximity to our principal data centers in mainly the trading metros such as London, Paris, and Frankfurt, and so on. So in a sense, they're responding to that by moving the cloud closer in, bringing their digital edge, if you like, up to the point that it's needed at, which of course will do a lot to solve the latency issues. As to the what you might call the more sort of, I don't know, emotional side of it, how is that going to really have an effect on people long term? I think it would be a brave person that today said that there wasn't going to be a substantial migration to the cloud over time. It's partly a matter of familiarity, and as more people begin to do more in the cloud, we were already saying that office productivity is there already. Certain types of historical data are still there. Analytics is heading there in a big way. As people become more familiar with it and begin to use it more, I think honestly, the idea has to be that quite a lot of it will shift out to the cloud. But our experience really across our range of customers, capital markets included, is that there always seems to be some element of a company's activities that are better served locally in what you might call a hybrid environment. So you have some on-premise, be it in a third-party data center, be it in their own machine rooms and so on, and then some out in the cloud. Almost what you might call right clouding, to get the right balance of activity between on-premise and in the cloud.
Yeah, no, I absolutely agree with that, and I think that's the hybrid model that is definitely where we're seeing, trading or advantage for customers through their technology as well. We're living in extraordinary times at the moment, and generational sort of phases. So it would seem churlish to avoid the sort of elephant in the room of COVID. Tell us about, from your experience, what it's meant for trading companies. I mean, we've touched on it before, that we think actually the financial services have been incredibly robust, through all of this, and it's been, to the credit of tech in the space, that it's been able to hold up so well. But tell us a little bit from your bird's eye view of how you're seeing it, and some of the successes and otherwise, and trends that we're seeing at the moment.
Yeah, sure. So I suppose the first area of that I would address was the sort of immediate need which the FS industry as a whole found itself facing back in that fateful week in March. And the first issue really was all around, as I think we sort of covered at the beginning, was all around collaboration. How could they continue to function in an environment where staff that were typically office-based, typically all together, typically working together as a team, suddenly were all remote? And well, we know the answer, which was they began to use tools like Zoom or Teams far more extensively than they had. And certainly we saw substantial work involved in that, and we were involved in 2 or 3 fairly major projects to ensure that certain companies were able to continue business as usual, if you like, from the start of lockdown proper. As far as the capital markets were concerned, of course, this brought a slightly different problem, because obviously those companies exist and thrive on things like low latency and close proximity hosting, something that, of course, we've been involved in for many years now and have built this substantial ecosystem in. And suddenly, again, they were faced with a situation where could they have these huge trading rooms full of people? Well, that was going to become extremely difficult. Now, of course, obviously, we're aware that that there were many types of operation that were able to continue at a certain level, if you like, because of necessity, and clearly the authorities recognised that, and so that was all perfectly permissible, but certainly not on the scale they'd seen. So what they were then faced with was with a situation where, again, a substantial proportion of their trading force was actually working from home. Now, this develops some new problems. Obviously, the first one is latency, because clearly, if you're looking at functioning from home, I myself have had numerous problems with internet connectivity, having to function day in, day out for multiple hours on video calls. And so when you're in an environment where very, very low latency is critical, that clearly is a problem for the traders. So they had some work to do to try and overcome as best they could those issues. We've also heard tales of security problems, not in terms of cybersecurity or physical security, but more the sort of regulatory security, where of course things have to be recorded and so on and so forth, and they have had to do quite a lot of work to ensure they're compliant, even with staff based wherever they happen to be. And so with the development of what happened over COVID, we've seen an increasing demand for connectivity in general, and for interconnectivity for the normal parts of the ecosystem that people tend to connect to anyway, but also now, in addition, for further services such as the collaboration tools, Zoom, Teams, and so on.
Yeah, which have been the savior through all of this. I mean, I've again said this many times. If it wasn't for Zoom and Teams, I think we'd have had a very different sort of lockdown experience, and probably a far greater toll on both the economy and lives at the same sort of time.
I think that's absolutely true, and it was interesting. Somebody I was talking to one of the major banks a couple of weeks ago, and in and amongst discussing all of this, they simply made the point that if it had happened 10 years ago, actually, where would we have been? And yeah, I think not sure I particularly want to think about that, actually.
Yeah, quite right too. We won't go into. But let's talk a little bit about something you've mentioned a couple of times already.
Sure.
Which has been one of the one of the sort of buzzwords of the last couple of years, but probably been thrown into more light recently as well, which is analytics. Tell us a little bit about what you're seeing in that space as well.
Sure. So I think analytics is fascinating, and we all know that that since the early days of the algo traders, the high frequency traders, and so on, analytics has played an enormously important part in all that they do. In many cases, of course, particularly with the algo traders, it actually drives everything they do. And so it's an absolutely fundamental, vital part of their being. And what we're seeing now, I think, is the increasing use of cloud to run analytics on, because it gives them the ability to flex. It gives them the ability to right size their installations. It means that they don't have to have huge quantities of on-site infrastructure, sunk cost, if you like, always on, and potentially not always being run. Also, with the sort of the older way of doing it, it's harder to respond to peaks. I mean, for example, although we've seen a fairly substantial sort of uptick in terms of infrastructure requirement since COVID really began to hit, the truth is that I'm fairly certain it would have been much higher had there not already been a reasonable element of analytics already being conducted in the cloud. But I think what is particularly interesting about analytics is of course, it's not just capital markets that are seeing the need for it. It is being operated across the entire financial services universe, ranging from banks trying to understand their customers better, trying to reduce levels of fraud, to insurance companies trying to understand risk better, trying to bring in the use of IoT devices and so on. And so pure analytics is certainly going to be a massive growth area for the future. And that's before we start looking at things like artificial intelligence. Which of course are really beginning to come into play now. I think from a lot of the things I've been reading, this is beginning to cause the regulators some issues, because of course with many of the AI systems, you're not entirely sure how it has come to the decision that it has come to. And there's obviously going to be needs to be some work done on that to increase the transparency level so that people can actually understand what the systems are really up to. But AI and its component parts, machine learning, deep learning, that kind of thing, are going to bring a further uptick, I think we're going to find, in terms of the need for analytical processing. Because apart from anything else, those are systems that genuinely, the more complex they get, they will literally swallow any amount of processing power you can throw at them. And their use, which I think is certainly, I'm not sure I'd say it's ubiquitous yet, but it's certainly growing rapidly, and that's going to continue to happen. So to me, analytics is one of the most exciting areas of this, because it again shows the value of the FS ecosystem. It shows the sort of the coming together of vast sources of data to do a wide variety of activities, from bettering things hopefully for the traders, bettering for their customers, fraud detection, so on and so forth.
Yeah, no, absolutely. And there's a whole world there that you've just spoken about rapidly evolving technology. And I think 2021 is going to be a truly fascinating year. I think there's been certain years in tech history where we've seen evolution at various speeds. Now, naturally, things of digitalization has sped up.
Yep.
People are saying over the last 6 months by 10 years, and that's quite feasible when you look at the adoption of new technology and how it's had to be adopted at speed for many companies. As we come into 2021 ever more quickly, and hoping for a much better year for everyone ahead. Tell us a little bit about what you think the trends will be, and so analytics obviously driving a lot of that, and I'd 100% agree with that, alongside AI and intellect. But what does it look like? I know this is a bit of a crystal ball thing, but if you're sat there now in November 2020, looking at 2021, seeing what it means for the financial markets and technology therein, what are we going to be looking out for, and where are the real opportunities for companies to differentiate through tech at the moment?
Sure. So I suppose we've kind of done the analytics piece, other than I think to say that I personally believe that, particularly in the case of AI, we're still in the relatively early phases of that. So there will be, I think, very considerable opportunity for companies to differentiate themselves in their use of tech such as that. There are a couple of key things. They're going to have to be transparent about what they're doing, particularly with the regulators. They're going to have to be extremely clear with their customers where these things are being used and how. And I think they're going to have to also develop some sort of very strong principles behind how these are used. But there's no doubt about it, the potential within AI analytics is definitely there. There are a few more things, though, that I think are going to be interesting. Firstly, we've done the business as usual piece with COVID and communications collaboration. That's kind of in the bag now, and honestly, I think it's, particularly in the insurance industry, I think it's surprised everybody how well that's gone. The fact that the internet hasn't collapsed, that didn't particularly surprise us, but I think it maybe did surprise some people that it didn't, but it hasn't. The fact that
Y2K Mark
firms,
II, isn't it?
well, exactly, yeah, precisely.
Yeah.
Yes, swat the millennium bug,
Yeah.
and and firms have been very fast to adapt to that, and I think they've by and large been very successful. But the question to me next, where next? What does that mean? What are you going to do to now stop responding to this pandemic and start taking advantage of the opportunities that it's going to offer? That clearly is going to require a certain element of rethinking of how people trade, what they actually do, and so on. And so I think 2021 is going to be a fascinating year, as you just said, as people begin to bring forward plans for how they're going to leverage this new situation. What are they going to do to change things to actually take advantage of what's happening, as opposed to merely keeping business as usual going? I think there's some very interesting things beginning to happen in what we would refer to, and everyone does actually, as the software-defined world. So, for example, software-defined networking, and at a particularly exciting level, the use of bare metal infrastructure, so that companies can start to take advantage of the ability to have dedicated machinery, which can be stood up for their use only, used for the time that it is used for, and then taken down again. You only paying for the actual usage that you make. And for example, one of the comments that we have heard from customers of ours around the world is that because of the specialized nature of what they do, they had become used to having sort of teams of engineers that flew around the world, maintaining equipment, setting things up in new locations, and so on and so forth. And I think one of the really exciting things about what's happening now in that whole bare metal arena is that these things can now be delivered without teams of engineers having to physically go to places, which of course at the moment is not possible. And so something we've had interest expressed from our customers is that they're saying, gosh, well, if we could do that, we could maybe open in a new area and see how it goes. We can replace equipment that requires replacement without having to be there, and so on and so forth. So I think the whole software-defined networking, the whole bare metal arena is going to start bringing opportunity to firms that hasn't been there before in this whole sort of dedicated focus on them type area. The final thing is that I think as cloud switches, I think you made reference earlier to the fact there are certain areas such as e-commerce and so on that have really lent on the cloud, really leveraged it, really used it. Of course, the cloud providers are learning from that experience. They're learning they have to change their approach so that certain areas, perhaps the highly regulated financial services industry is one, they can begin to really respond to their needs and their requirements and start bringing them product that is easy for them to use and doesn't require the sort of levels of thought and care that perhaps it does at the moment. And I think that's going to be an interesting arena in which we're going to see, these sort of, we've heard, of course, about the major cloud providers almost sort of bringing cloud in a box, in a rack to your data center or your machine room, whatever it is, so you can leverage what they're doing, but in a sort of rather more controlled, rather more visible, rather more physical fashion. So I think that's going to be an interesting area as well.
And moving slightly away from what we've been talking about as well. I know you have a stronghold in the insurance world, and that's a place where your heart lies as well. Tell us a little bit about that. So capital markets. There's. I absolutely agree with everything you've said there. I think it's going to be really, really interesting. I think it's going to be winners and losers depending on how adaptable they are to all of those areas that you've just mentioned. Insurance has sometimes in my opinion, probably been a little bit sleepier than the financial services sector in terms of their adoption of technology, fairly or unfairly. You'll be able to comment on that in a second, I'm sure. But I'm really interested to see what your take is on the insurance space as well. What's going to happen there?
Well, I think the insurance space is having to change. It is having to respond to digitization. It is having to respond to things that the e-commerce world is used to, like self-service, like the ability to do things quickly, not in capital markets latency times, but nevertheless, much faster than it has. And I think the market it's certainly begun to shift. There is no question about that. Let's face it, in March, at the beginning of March, the insurance company was keeping an eye on COVID, but it was quite happily ticking along in the way that it has done for quite a while. By the end of March, when all their staff had gone home, the simple truth is that as an industry, I have yet to hear anywhere of an insurance company that has failed, or one that has had to have regulatory action taken against it because it has been unable to continue its business because of COVID. And I don't mean from a sort of financial paying claims perspective. I mean from the perspective of being able to function. It simply hasn't happened. Now, I think that may have come as a surprise to people outside the industry. As you say, it does have a reputation of being sleepy. And by the way, I would say that there are good reasons on both sides why that happens. So it's not simply a one-way street as to why that situation has occurred. But the market is now definitely beginning to address the whole issue of digital. The large general insurers, particularly the ones that sell to the general public, they've been having to dip their toes digital for quite a while. Because it's been a necessity if they want to keep selling product. But the truth is that perhaps the systems don't run as deep as they could do. Now they're in this situation where, who knows, God forbid, this could happen again, and that we might be in the future faced with a similar situation. So I suppose the point is that from a business continuity perspective, this can no longer be described as an unforeseen possibility. It's happened before. So they're very much having to look at A, how they cope with that, but B, how they then use the opportunity now to respond to the digital needs. I think there has been honestly a certain amount of lip service paid to it, but now it's read, and the sort of the advent of the insurtechs that we've been seeing springing up for quite a while is going to continue to impact on the incumbents because of what's happened, and we're now, I think, seeing a real switch from them. One area from an Equinix perspective, which has really rammed this home to us, is the fact that I think our historical message of interconnection, of people being able to bind themselves together digitally to exchange information and trade, whatever that means, has been one that it's been less clear to the insurance market how it can benefit from it. Yet, no sooner had this situation begun than suddenly there was the realization that okay, interconnection didn't just mean connecting my office here to my office there, or potentially to some particular insurance partner. It also meant Zoom, it meant WebEx, it meant Teams, it meant security, and so on and so forth. And so we've seen a substantial growth in that area, and I think that is set to continue. As I said earlier, though, what I think insurers are faced with is the situation now where they've got to decide what they're going to do with this and how they're really going to leverage the situation and take themselves forward. I think that to finally conclude that, insurance for a long time now has been a reactive industry that has responded to events. You have a crash, they put it right financially, etc. One thing that we're hearing many of the major insurers talk about now is the whole idea of shifting towards even risk prevention, where they can use IoT devices to extract information from plants, from whatever it might be, use their AI systems, use their historical data to work out that a certain pattern of activity could lead to, potentially even disaster, and stop it happening in the first place, as opposed to picking up the pieces when it goes forward. I think that's a very exciting prospect for the insurance industry, because it will present them with the opportunity to become a trusted advisor once again, as opposed to merely a reactive organization that pays money when something goes wrong.
Yeah, no, very, very, very interesting, and it's good to see that sort of acceleration happening in that space as well as the capital markets through all of this as
Absolutely.
well. Let's finish on Equinix, because like I say, an interesting year for the business, and one where it's to me it's another company that's done incredibly well through this time. What's on the cards for you? What's interesting about happening at Equinix in 2021 and the end of this year, and what's the story there?
Well, I think that that really, what we have seen this year is a growth in the sort of the main areas that we have been servicing actively for the last few years. So we've seen elements of growth in co-location, particularly in capital markets. We've seen substantial growth in terms of interconnection, so that people can, as I said, link to each other. We've seen, of course, the onward march of cloud, and our sort of particular area in that is that we provide many of the on-ramps to the cloud, so the connectivity to the cloud itself. So that has been growing a lot. But I think the other thing is that if we sort of look at what Equinix sets out to be, I mean, as I said earlier, we start ourselves as the world's digital infrastructure company, to link all these things together. And in essence, that's sort of based on really three main component parts: being in all the right places. And certainly we have based a lot of our expansion around the world on being in key financial services metros. So this is particularly relevant to the capital markets, to the FS industry in general. So being in all the right places, that we can hopefully bring together all the right partners, because of course partners are no longer simply an exchange and buy side and sell side and market data and so on and so forth. There's now a whole raft of things that exist around this that builds up a true commercial ecosystem, as opposed to maybe a trading environment. So having all the right partners is a key thing. And really, what we've sort of started to refer to as all the right possibilities. As digitalization, you said this a few times already, as digitalization continues its relentless onward march, I think it's important for people to understand that the possibilities for companies are there to be grasped, but you do need to be able to get access to the component parts. And everything we do is structured around simplifying and securing people's ability to be digitally connected to each other.
That simplification, I think, is a complex masterstroke, if that's not too much of a contradiction in terms. It's simplification seems to be the answer to all ills, and everyone always loves to overcomplicate. And the companies like yours, I think, who are able to give that blueprint of making things easy, are the ones who absolutely thrive. And it's no wonder that things have been going well for you in being able to demystify all of that side of things for your customers as well. James, it's been wonderful talking to you, and I know there's going to be people there who are keen to follow up with you as well with it. Tell us a little bit about how they can get in touch with you. What's the best way for people to reach out and discuss this more and find out a little bit more about the things we've covered so far?
Well, firstly, I would always recommend that people look at the Equinix website, which is www.equinix.com, which displays a very wide variety of the things that we can do. We are always keen to talk to anybody about this whole area of digitization. And I think the other thing is I would point out is that yes, we are now a very substantial organization, but certainly we seek to trade with people who are relevant to our markets, relevant to our ecosystems. So people shouldn't be concerned about the fact that we're a very sizable firm in coming to talk to us. We will be delighted to talk to anyone. So
fantastic. Well, I'm sure they're going to get good value from it if this conversation's anything to go by. And it's been great for you to be so generous with your time and insight and data.
Very kind of you to have me on.
Well, it's been an absolute pleasure. I really appreciate it. Thank you for joining us, and thank you all for watching. we will see you soon on another episode of Fintech Focus TV. James, thank you very much.
Yeah, many thanks.
Good man.
Bye.
Thank you all.